Good afternoon, everybody. My name is Romy Jurado. I'm an attorney here in Jurado and Associates. We are a law firm. We're in Miami and 108 in Biscayne. Today's presentation, I'm going to talk to you guys about FIRPTA, but I want to let you all know that I also can speak about different subjects. So in our firm, we do real estate law, immigration, litigation, probate, trademarks, copyrights, estate planning. And so we're always looking to be a resource to the real estate community. So if there's any questions that you have regarding that, always feel free to let us know. Today's presentation, I like to make it really interactive. So please put all your questions in the chat or in the Q&A. So that way we're able to answer all of them. Today's topic can be a little, let's say, a little intense. So, because there's so many different playing parts. So just, feel free to ask any questions that you have and hopefully I can answer all of them. All right, so let me start by sharing my screen so everybody can see my presentation. So give me just 1 second. I am fully bilingual, so if you want to ask questions in Spanish, I can address them too. And thank you so much for joining me at the end of your day. I really appreciate it. Okay, I love cats, so you're gonna see a couple of kitties here and there. Don't let that distract you. So FIRPTA for realtors. First of all, what is FIRPTA, right? It's the Foreign Investment in Real Property Tax Act. Under FIRPTA, a buyer who's purchasing from a foreign seller is required to withhold up to 15% of the gross sales price from the proceeds as a deposit due to the IRS and mail the funds to the IRS within 20 days of the closing date. Certain exceptions apply. FIRPTA applies in nearly all transactions, residential, commercial, in which a foreign owner of U.S. real property sells such interest. And it also applies to rental income. FIRPTA imposes a legal responsibility on the part of the buyer to withhold and remit funds to the IRS. The buyer is the withholding agent. The amount is not the tax, but itself, it's paid on account of the tax that may be due from the seller. So what does this mean? What happens? So before the good old days, foreigners would come buy U.S. real estate, sell it, and take all their money with them and buy. The IRS says, no, we don't want that. We want to make some money out of the money that they made. They bought a property, they sold it, they made a profit. We should be able to tax them on that. So that is what they came up with FIRPTA, with the Foreign Investment in Real Property Tax Act. However, FIRPTA, it's not itself a tax. What the IRS said is we're going to make the buyer, responsible as the withholding agent to send 15%, or before it used to be 10%, 15% of the wholesale price to the IRS, to us, so that it forces the seller, if they want to see any of that money back, to file a tax return. And when they file a tax return, then they have to obviously pay taxes. So FIRPTA itself, it's not a tax. It's a payment that is made to the IRS in order to kind of force the seller to file a tax return if they want to see some of that money back. Sometimes they might see some of the money back. Sometimes their tax might be higher. We just don't know. It depends on the particular property. So FIRPTA applies to foreigners, right? To foreign persons, to foreign entities. So who is a foreigner? That's not such an easy question when it comes to FIRPTA. So let's talk about that. A foreigner is an alien, a person who is not a U.S. citizen or U.S. national. So if you have somebody that's not a U.S. citizen or U.S. national, you might think this person might be a foreigner. A foreigner is somebody that's not a resident alien. Also somebody that has not passed the substantial test and does not hold permanent residency in the United States. So green card holders, people that have permanent residency, they are not considered foreigners for FIRPTA, okay? Even though they're called alien card, they are not foreigners under FIRPTA. Entities controlled by non-residents that are disregarded entities such as single-member LLCs are foreigners. So I used to see a lot of foreigners being told, form an LLC, buy your property under an LLC, and then you don't have to worry about FIRPTA. That's not necessarily the case. If you form an LLC and you buy the property under an LLC and you're the only owner and that entity is a disregarded entity, okay, then FIRPTA will apply because it's a disregarded entity and you're the only owner. FIRPTA shouldn't apply if you buy a property and you name it under the LLC and there are two owners of the LLC and the LLC has an EIN or tax ID. Also, FIRPTA shouldn't apply if you buy a property, you put it under an LLC, but that LLC is taxed as a corporation. Because one thing is the entity that we form and another thing is how that entity is taxed. If it's a disregarded entity and it's one member, FIRPTA applies. If it's one owner of the LLC, but it's taxed as a corporation, FIRPTA may not apply. Also, if the LLC has more than one owner, FIRPTA does not apply. However, if you have a situation where you have a property that was bought 6 years ago, and let's say, and it's put under an LLC, and supposedly there are two owners, but they never file a tax return, they don't have a tax ID, FIRPTA should apply. So you need to be really careful. And who needs to be careful? The buyer. The buyer is responsible for this. I just got an email yesterday from somebody, and I hear this a lot, and they were telling me how their client, the buyer, they were a realtor, the title company didn't know what they were doing. They didn't withhold FIRPTA money. They never sent it to the IRS, and the IRS came knocking to the buyer, asking them to pay for the money. Yes, that does happen. The responsibility falls on the buyer. So be careful with that. All right, so who else is a foreigner? Foreign corporations and foreign partnerships, foreigner. Foreign trust, foreigner. Foreign states, foreigner. So whenever we have any of these situations, the FIRPTA withholding will apply. So what is this FIRPTA withholding? The buyer must withhold 15% of the sales price upon disposition of U.S. real property by a non-resident alien of an entity. So the buyer must hold 50% of the sale price, not of the money that the seller made. So if they bought a house for $100,000 and they're selling it for $500,000, it's 15% of the $500,000, not just on the $400,000 that is the profit. So be really careful with that. For example, on $1 million sale, we're talking about $150,000 that needs to be sent to the IRS. Sometimes it far exceeds the tax due on the sale. Sometimes the seller bought it for $400,000 and they're selling it for $500,000. So they're only really profiting $100,000, but then they need to send, a lot of money to the IRS from that. So it just depends. And it can cause a cash flow problem to the seller. So it's always important to know, if we're dealing with a foreigner, to start planning ahead. What can we do to either minimize FIRPTA or deal with FIRPTA? And many sellers, they don't want to file a tax return and wait for April to file a tax return to see what money they get. And now the IRS is taking, longer to send any money back, and it can be really difficult. Now that 15% is reduced to 10% if the person buys that property and they're gonna occupy it there, and the property is between $300,000 and $1 million. Then the withholding is reduced to 10%. So this happens too. So what if one seller is a foreign person, but the other is not? Okay, if the property transfer was owned jointly by a U.S. person and a foreign person, then the amount subject to FIRPTA withholding is allocated between the sellers based upon the capital contribution of each seller or the percentage of interest of each seller. So FIRPTA will apply to the seller that's a foreigner. So let's say I own property with my cousin. My cousin is, well, I'm Peruvian too, but my cousin doesn't have citizenship here or residency. We own it 50-50. At the time of selling the property, they're gonna withhold 15% of her 50% of the property, okay? Not of the whole amount that is sold, but only of her part. If I say she only owns 10%, then that's what they're gonna withhold, but that needs to be clearly stated in the deed. So I cannot get creative at the time of closing to try to avoid FIRPTA and say she owns less. Because if the deed says joint tenants in common, then we're tenants in common 50-50, okay? So that's important to keep in mind. All right, I see some questions here. Let me see. What does disregarded entity mean? It means it's not a taxable entity. So anytime you form a single member LLC, an LLC with just one owner, whenever you do your tax return, as US people you are, you're just simply gonna put them as part of your personal tax return. It doesn't do itself a tax return, single member LLC. However, if that LLC is taxed as a corporation, now they do a tax return. So no, it's not a disregarded entity. So FIRPTA applies to single member LLCs that are taxed but that are not taxed, that are disregarded entities because you just put them as part of your own personal tax return. All right, somebody's asking me, hello, under the LLC, are member, managers, or owners the same thing? Explain single managers, members, owners with regards to withholding and FIRPTA. Okay, so an LLC can be managed by either its members or its managers, okay? The managers can be members, but they don't have to be. Members are what we refer to as the owners of the company. When it comes to whether FIRPTA applies or not, in a single member LLC, then what we care is the owner, meaning the member, a foreigner, yes or no? If the member is a foreigner, FIRPTA applies if it's a single member and it's disregarded. If the member is not a foreigner, then FIRPTA doesn't apply. If the member is a foreigner, but the LLC has a manager who's a US person, FIRPTA still applies because the member is a foreigner. If it's a multiple member LLC, multiple member LLC that has 2 owners or 10 owners, and they're all foreigners, it's not going to be a problem as long as that LLC has an EIN, a tax ID, then it's not going to be a problem even if all the members are owners. FIRPTA shouldn't apply, assuming they have been doing their taxes all throughout. You know, if they haven't, they don't even have a tax ID, then that situation is more iffy. All right, let's see what other questions. No other questions yet. So FIRPTA, there's also exemptions to FIRPTA, right? So just because the owner is a foreigner or it's a disregarded entity with only 1 owner and that owner is a foreigner, there might be situations where FIRPTA still won't apply. So first is seller furnishes a no foreign affidavit, or seller provides a withholding certificate from the IRS, or the property is acquired for use as a resident and the amount of the sales price is $300,000 or less. If any of this happens, then we don't have to withhold for FIRPTA, okay? So let's talk more in detail about that. Seller is not a foreign person. So seller will confirm that they are not a foreign person by giving a buyer the certification stating on the penalties of perjury that the seller is not a foreign person, and they're gonna state seller's name, US taxpayer identification number or social security number, and the home address. And the address of the entity in case of an entity. So this is commonly referred to as a non-foreign affidavit or non-foreign certification. If as a buyer you receive this by the foreigner on the penalties of perjury, then you can rely on that they're not a foreigner. Now, it's very important that the right form is used for the certification. I have seen where sometimes they do the incorrect form and then the buyer cannot rely on it. So there's different types of certifications. If it's the individual that's the owner, that's not a foreigner. If it's an entity, right, it has to include a statement that it's not a disregarded entity. We need to get the corporate tax ID or the EIN. It has to be a US form entity and it has to have a business address. So there's different situations where we're going to get a foreign affidavit, but we want to make sure that non-foreign affidavit that it's properly executed and that there is a valid affidavit, and it's the buyer's responsibility to make sure that it is in order for them to rely on it and not require the withholding. So since 2008, because as you can imagine, this is a lot of responsibility for the buyer to do. Since 2008, the seller, right, may provide a completed non-foreign certification to a qualified substitute instead of the buyer. So who is a qualified substitute? A qualified substitute may be the person responsible for the closing the transaction, such as an escrow company, title insurance company, or buyer's agent. The qualified substitute gives a statement to the buyer under penalty of perjury that he or she has possession of the seller's foreign certification, non-foreign certification. So what does this mean? So us as the closing agent, the closing attorneys or title company, we will ask, once we realize that the seller might be a foreigner, we will ask for this certification. And then we will make a determination whether we think the seller is a foreigner or not. And then we take that and then we kind of tell the buyer, listen, we have the certification. He's not a foreigner. We're not going to send 15% to the IRS. Please be careful. Title companies, even attorneys, don't do it right. Sometimes they don't. They don't check, they're not familiar, I don't know. And then guess who the IRS is gonna come after? Not the title company or the law firm, or them too, maybe. Yes, actually they come after them too, but also the buyer. So if you are representing the seller And this might be a transaction that is subject to FIRPTA, you know, from the beginning, from the listing type. If it's under name and they're foreigner, you know, ask, inquire, get them to meet with an attorney. It could be me if you want to do it with me, and we could discuss, does FIRPTA apply, does it not, can we do certain things to minimize it, you know, and so that we're prepared when we're receiving offers. If you're representing the buyer and you have a suspicion that the seller is a foreigner, make sure you deal with the title company and say, listen, let me see the non-foreign affidavit. What did you rely on? You know, or hopefully, you know, if it's us, we'll let you know, we'll keep you posted, but you want to make sure, because at the end of the day, the responsibility would fall on the buyer. And it's really sad when the IRS comes after them. Nobody wants the IRS after them. All right, somebody's asking me more questions. Thank you. I love the questions. So let's see. What if the home is owned in the same name of a business? So if the home is owned in the name of a business, it depends. Is it an LLC with one owner? And is that owner a foreigner? Then yes, FIRPTA will apply. If the name of the business is a foreign company, then yes, FIRPTA will apply. If it has more than one owner, 2 owners, 3 owners, and they've been filing tax returns for the LLC and the LLC has a tax ID, then FIRPTA may not apply. If it's a corporation, Florida corporation, then FIRPTA may not apply. So we have to see who owns the property and in what name to see if FIRPTA applies or not. Somebody's asking me, okay, in Guatemala, some of the owners get visitor green cards and one possibly has a social. The business does not do business in the US and has never filed taxes. Just because somebody has a social security number does not mean they're not a foreigner. Very important. I do a lot of immigration. We do business immigration, investment immigration, employment immigration, student visas, family visas, a whole shebang. You can come to the United States, okay, and obtain a social security. Before, everybody used to get one, but now you can still get one. If you're coming here to study, you get a student visa, you obtain a social security number, you're still a foreigner. You can come to the United States and get a temporary work visa, such as an H-1B or an H-2A or a bunch of other ones. Guess what? You're still a foreigner, but you have a social. So the title companies cannot erroneously rely on the fact that somebody has a social to say they're not a foreigner, because the responsibility will fall on the buyer. Sadly, they do. Sometimes they're not aware of, you know, immigration laws and things like that. And they think, well, they have a social, they're going to be a US person, let me not withhold. I mean, sadly, that happens. But no, just because they have a social does not mean they're not a foreigner. Okay, somebody's asking me, what if the foreign seller has the home under a live state? Okay, so let's explain what a live state is. A live state means you own the property while you're alive, and at the moment that you pass, it goes to somebody else automatically without it going to probate. A foreigner can own a property in the live state. They can own it while they're alive, and then it goes to somebody else upon their death. Depending on how that deed is written, sometimes the owner of a live state has the right to sell the property. Sometimes they don't. They're not even allowed to sell it, because you're only allowed to own the property, not even to occupy the property while you're alive. But the moment that you die, it goes to somebody else, to the remainder, and you don't have the authority to sell it. So to you, I would tell you first, before you list a property, have us review the deed to see if they even have the authority to sell. If they do, because it's a life enhanced state deed, FIRPTA will still apply if they're a foreigner. So just because the property is titled under a life state deed does not take you away from FIRPTA. Okay, let's see. Who is responsible to provide the withholding certificate? I am representing the buyer right now. How can I be certain the certificate is correct? Okay. If you're representing the buyer, you want to ask, I suppose the buyer chose the title company, so that, or the attorney, so the title company should prepare the certificate, check the documentation of the seller to make sure that it's done correctly and to ensure the veracity of, you know, to make sure that they're not a foreigner. If you don't feel comfortable, then you can hire us to represent the buyer, or the buyer can hire us to review it and make sure that if it's a foreigner, the title company is withholding the 15%, and if they're not, that they're not. So it's the title companies or the attorney representing the buyer's responsibility to look at that. At the end, is the buyer's responsibility to make sure that their agents are properly doing their work. Some more questions. A foreigner owns a condo, is selling, okay, sorry. A foreigner who owns a condo is selling it, and a US citizen buys it as an investor to rent out for profit. If it sells for more than 300,000, what rules apply? If it's sold less than 300,000, okay. So in order for the exemption to apply. There is an exemption to FIRPTA. If the buyer buys it in their own name, so not for investment, and they will use it for their primary residence, okay, and the purchase price is $300,000 or less. If they're buying it for investment, that's not going to work, okay? They need to buy it under their own name, and they need to sign a affidavit. The buyer will sign that they're going to occupy the property for the next 2 years, and you cannot change that. And we're going to discuss that in a minute. So I don't think that in your scenario it might work. I think that FIRPTA withholding will still apply, and unless the seller can do something like a withholding certificate, which we're going to talk about that in a minute. So going back to the exemption of FIRPTA, $300,000 or less, okay? These are what you need. So purchase price must be $300,000 or less. The buyer must consist of individuals. So it can be one person or many individuals, it's fine. The buyer or members or his or her family must have definite plans to reside in the property as primary residence for at least 50% of the number of days used by anyone during each of the first 12-month periods. So the buyer or the buyer's family needs to reside there as a primary residence. If the buyer does not meet the residency requirement after closing, then the buyer is liable for the withholding. So let's say that your buyer signs this affidavit, yes, 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 I will do that, I will occupy it, and then they don't. Guess who's responsible for that withholding? The buyer is, because the seller received an affidavit from the buyer saying you're gonna occupy, so I'm not gonna send my 15%. Oh, great, but now the buyer changed their mind, they're responsible for that money. Other common exemptions from withholding, right? So we're talking about when the title company or attorney doesn't need to withhold. If the amount the seller realizes on the transfer is zero, meaning there is no money realized, right? Sometimes that happens in short sales, but be careful, even when dealing with short sales. Please speak to a FIRPTA knowledgeable attorney if the whole point is that the seller didn't make any money, so that we can see if FIRPTA withholding really does not apply. Please make sure. That's the best thing I can tell you, because there's different scenarios. Don't assume because it's a short sale, there's no FIRPTA withholding. Don't assume that. And don't provide legal advice. Please get them to talk to attorneys, because we don't want them coming after you because you told them one thing and then now they're saying, well, look, FIRPTA withholding applies. So please have them speak to an attorney. The property is acquired by the United States, or a possession or a political subdivision thereof, or the District of Columbia. If the U.S. buys the foreign property or state of the United States, then guess what? FIRPTA won't apply. Seller gives you written notice that no recognition of any gain or loss on the transfer is required because of a non-recognition provision in the Internal Revenue Code or a provision in the tax treaty. Must file a copy of the notice by the 20th date after the day of transfer with the Internal Revenue Code, Internal Revenue Service, the IRS. If the seller is saying, because of a treaty, FIRPTA shouldn't apply, fabulous. Let me speak to their accountant that's advising them on this, and we can decipher if that's the situation so that no FIRPTA withholding will apply. We can't just rely on what they say. We have to look at the documents and make sure that what they're saying is correct. Otherwise, we are liable. Or we could also receive a withholding certificate from the IRS that excuses withholding. You know, we can do a withholding certificate, and I'm going to explain to you what is a withholding certificate. We do this a lot too. So a withholding certificate is a certificate by the IRS, right, stating that the adjusted amount to be withheld from the disposition of U.S. property should be, okay? So the IRS send us a certificate that says, Romy, this is what you need to withhold from this seller. You know, it's not the 15% of the wholesale price, is this amount. The buyer, the buyer's agent, or the seller may request a withholding certificate. Why the buyer? Because it's the buyer's responsibility to make sure the withholding. So maybe you want to ask the IRS, hey, IRS, how much should we really be withholding? And once you receive that, then you know what to send to the IRS. The IRS will generally act on this request within 90 days after the receipt of a complete application, including that individual taxpayer identification number of all the parties of the transaction. This may be an issue if sellers have not applied for ITIN. So if the seller wants to apply or the buyer wants them to apply for a withholding certificate, all of the selling individuals will need to have an ITIN. Okay, without an ITIN, we cannot get this certificate, and we can help them obtain that. We work with a CPA that is an authorized accepting agent, and we will help them with this. A seller that applies for withholding certificate must notify the buyer in writing that a certificate has been applied for the day prior to the transfer, okay? A withholding certificate may be issued due to a determination by the IRS that the reduced withholding is it's appropriate because either the amount that must be withheld would be more than the seller's maximum tax liability, or withholding of the reduced amount would not jeopardize the collection of the tax, exemption from U.S. tax of all gain realized by the seller, or an agreement with the IRS for payment tax providing security for the tax liability. So let me tell you this in very simple terms. Okay, it says that they give you a response within 90 days. That's not the case anymore. The withholding certificate, with everything that happened with Corona, with the loans and everything that the IRS was going through and the IRS being closed, this is probably taking, I don't know, 6 months, all right? That doesn't mean that your closing will be delayed. That's not what it means. So as soon as we know we have a seller, we need to apply for an ITIN so that they have an individual taxpayer number that needs to be up to date, because ITINs expire every 2 years. So just because they had one 5 years ago doesn't mean it's still valid. We need to apply for one now. And then we can do the withholding certificate, and it needs to be sent to the IRS prior to the closing, okay? Prior to the closing, not at closing, not after closing, prior to the closing. So if we send this withholding certificate to the IRS, we know they're gonna take forever to answer. We can withhold that amount, the 15% of the sales price, yes, the whole 15% of $1,500,000, whatever it is. And we can keep it. Now, I know some title companies that don't want to keep it, that's fine. If we're representing the seller, we can keep it in our trust account, all of the amount, 15%. And then we wait for the IRS to send us the certificate back and to tell us how much we really need to pay in tax. So in order to apply for the withholding certificate, it's like a mini tax return that we do. So for example, let's say the client bought the property at $100,000 and now they're selling it for $500,000 to an investor. But the client tells me, Romy, I invested in this property $200,000. That is why I'm able to sell it for $500,000. So I said, okay, fabulous. Show me receipts that you invested $200,000, and they do. So now I have $100,000 that the client paid for the property, $200,000 shown in receipts of improvements that they made to the property, and we're selling for $500,000. So their taxable amount should only be $200,000, right? So they might be taxed at 20%, 15%, I don't know, of $200,000. But the IRS are saying, give me 15% of $500,000. So what we do is we keep the 15% of $500,000. We wait for the withholding certificate to come back to us. The closing already took place. As soon as we get the certificate back, we send to the IRS the actual amount of tax, and the rest we give automatically to the seller. Why would we want to do this? Why would the seller want to do this? Because now they don't have to go chasing the IRS for their money back. And they don't have to, we're in control of the money. And as soon as we get the withholding certificate, we're able to give it back to the seller, and we're still able to close on time, because as long as you apply for the withholding certificate before closing, you're good to close. So this is something that we can do, okay? Let's see. So who is responsible for providing the withholding certificate? The IRS is, they provide it. But we can request it, or the buyer can request it, and we should request it because we want to make sure that the seller only pays the IRS the actual amount and they're not chasing after the IRS. And we want to do this soon before closing, as soon as we know we have a deal. All right, let's see, we have other questions. Is this going to be recorded? Yes, I'm hoping that it will be recording. I'm recording it, so as long as it comes out good, I will share it with everybody along with my presentation. So what have we learned so far? Foreigners need to have ITINs in order to apply for this withholding certificate. And even if they don't want to apply for the withholding certificate, if they're sending the money to the IRS, they're going to be forced to file a tax return in order to see any of it back. So we should be getting them ITINs anyway. So what happens if no exemption applies, right? So the property is being sold for more than 300,000 or more than $1 million to an investor. Foreigner is a foreigner. What happens? Okay. So the buyer must withhold 10% or 15% of the purchase price and transmit it to the IRS. That's it. You know, it's 10% if it's between $300,000 and $1 million and the people occupied as a primary residence, or 15% in any other situation. So the buyer must withhold, meaning the title company or closing agent. That transmitter must also include Form 8288 and 8288A. All forms submitted must include a tax ID number. So the seller has to apply for an ITIN. And of course, the ITIN has to be requested by the seller. Otherwise, guess what? The buyer cannot send this money to the IRS, because how will they tie up this money to a person if they don't have a social? That is why the seller needs to apply for a social security number. So I'm sorry, for an ITIN, not a social security number. So what is an ITIN? I keep on saying this, right? So an ITIN is an individual taxpayer identification number. It's used for sellers who do not qualify for a social security number, and they apply using a form called a W-7. And please, it's so important to apply for this way in advance of closing, okay? So if we know, you guys know, you're listing a property that might be a foreigner, let's start working on this so it doesn't delay our closing and that everything goes forward and smoothly. And guess who the sellers will blame for this? They will blame you. They'll say, why didn't you tell me I was a foreigner? Hello, they know. Why didn't you tell me FIRPTA applied? Why didn't you tell me this? Now I don't want to sell my property anymore. We've had that happen. So seller listed the property, buyer got an offer, seller realized that at the end of the day, the net will be a lot less because of this FIRPTA withholding and they had no exemption. Now they no longer wanted to sell. If they did this prior to the offer being accepted, then all good. All you did was lose a listing, maybe, assuming your listing agreement doesn't say otherwise. But if they did this at closing, okay, and or before closing, once it was an executed contract, they cannot back out anymore. The seller has to sell because now the buyer can sue them for specific performance and force them to sell, unless the contract said otherwise. So we've had that situation too, where the seller and the contract, the buyer agreed to do the affidavit that they were going to reside in the property. The property was less than $300,000. And then prior to closing, the buyer said, no, I no longer want to sign the affidavit. So now guess what? We don't have to sell to you because you agree you were going to sign the affidavit. So the contract will regulate what happens, but it's so important that the buyers and the sellers are informed well ahead of time so that we don't have issues. Again, the buyer may apply for withholding certificate. It's something that we do a lot. I recommend it because maybe we can reduce the withholding amount. The 10 or 15% can be held in escrow pending a determination from the IRS. If the title company doesn't want to have it in escrow, then we can do it. Then after the IRS tells us what the amount is, we're required to send the money to the IRS within 20 days. Be really careful of this, please, if you're not using us. You want to make sure and you want to ask the title company, please send us proof that the withholding was sent to the IRS. Why? Because if they don't send it within the 20 days, or if they don't send it at all, which actually does happen, the buyer is responsible. So please be careful. Any amount above the withholding amount can be returned to the seller and cannot obtain withholding certificate without an ITIN. It's so important to obtain an ITIN. I've had people tell me, Romy, I want to sell my house, but I don't want to obtain an ITIN. And I say, well, guess what? You're not going to be able to sell it because the title company won't be able to send you withholding. So it's really important that they understand they have to obtain ITINs. Or even more important, if they don't want to obtain ITINs, fine. Then have them buy property under an entity. Let's have it properly structured so that their name and their situation doesn't appear anywhere. You know, that can be done too. So what happens if buyer or their counsel fails to comply, or the title company? So what happens? Well, guess what? The buyer is liable for the payment of the tax, interest, and penalties if the seller does not pay. So not just the withholding amount, the 15%, the interest and the penalties if the seller never filed their tax, which they're likely not going to because nothing forcing them. You didn't withhold. So now you're liable for the interest and penalties. Yes. The buyer is liable for interest even if seller pays tax also. Isn't that crazy? So if they pay the tax, the buyer is liable for the interest. Agent liability, this is where you and I fall in. The attorneys and the real estate agents may have some liability under FIRPTA requirements. Be careful. An agent of the seller or buyer who knows that a non-foreign certification is false must notify the buyer and the IRS. If you know that the seller is lying when they do the non-foreign certification, you must notify the buyer and the IRS because otherwise they will come after you. Failure to do so makes the agent liable for tax up to the amount of his or her compensation. So that is why title companies, lawyers, they must do their job, I hope. But otherwise, it falls under the responsibility of the buyer. Let's see, how long does it take to get an ITIN? It depends. So we want to apply as soon as possible. Maybe it could take a month, maybe not. But we could also submit it together with the application for the withholding certificate. So let's just plan ahead in time so that we have time and we can do the closing with no problems. Somebody's asking me that they're confused. If a buyer plans on staying in the property as a primary, $300,000, is there a FIRPTA? No, there isn't. If the buyer is buying the property in their own name and they plan to make it their primary residence, and the property is less than $300,000 or $300,000, no FIRPTA withholding applies. They sign the certificate, the affidavit, no problem. Okay, so no withholding will apply if the property is $300,000 or less, and the buyer will utilize it as their primary residence, or family of the buyer will utilize it as their primary residence. So it doesn't have to be you. It could be I buy the house for my mom, I buy the house for my sister. But the important thing, you have to buy it in individual's name. You cannot buy it in a company. You cannot buy it as an investment, okay? I'm gonna go ahead and put my contact information here so that you guys can have it. All right, so 1031 exchange. Let's talk about 1031 exchange because it actually helps us out when it comes to FIRPTA, believe it or not. So first of all, what is 1031 exchange? A 1031 exchange, okay, gets its name from Section 1031 of the United States Internal Revenue Code, which allows you to avoid paying capital gain taxes when you sell investment property and you reinvest the proceeds within certain time limits, okay, on a property or properties of like kind of equal or greater value. So 1031 exchange is available for US people and for foreigners, okay? But for the foreigners, it's a little more complicated. So again, what is 1031 exchange? Basically, I buy this house as an investment property. I plan to sell it. I don't want to pay capital gains right now because I plan to use all of the money to buy one property or more properties, and I want to keep on doing that. So under the 1031 exchange, I can do that, and I don't have to give the money to the IRS, as long as I do it through the use of a qualified intermediary. So what is that? Under Section 1031, any proceeds received from the sale of property remain taxable, right? You have to pay capital gains. However, proceeds from the sale must be transferred to a qualified intermediary rather than the seller of the property, and rather than the seller of the property, and the qualified intermediary transfer them to the seller of the remaining replacement properties or properties. So what does that mean? I bought house A for investment property. I bought it at $100,000. I'm selling it at $500,000. There is $400,000 really that I've gained, but I don't want to pay taxes on that right now. So the $400,000 or $500,000 of the sale price don't go to me as a seller. They go to the qualified intermediary, who will then give that money to the other property that I'm purchasing. That's called a 1031 exchange. A qualified intermediary is a person or company that agrees to facilitate the 1031 exchange, holding the funds involved in the transaction until they can be transferred to the seller of the replacement property. The qualified intermediary can have no other formal relationship with the parties exchanging the property. So who can be a qualified intermediary? Anybody really, okay, but we work with companies that serve as that, but they cannot represent the seller. So no, I'm not a qualified intermediary. You cannot be a qualified intermediary. We work with a qualified intermediary to facilitate the 1031 exchange. This works for US people and foreigners. For foreigners, there is a little thing. FIRPTA in 1031 exchanges. If the foreigner does a 1031 exchange, they might be able to not deal with FIRPTA. Might. Okay, let's see how we would have to structure it. So in order to defer capital gain taxes and other taxes that would normally be due upon the sale of real estate, foreign investors may utilize Section 1031 exchange to exchange their US real estate property for other US property. But FIRPTA imposes additional requirements. So let me explain to you with an example. So for example, Juan, a citizen of Peru, my beautiful country, is planning to complete a 1031 exchange with his Florida property. Okay, so Juan has a property here in Miami. First, he sells his Florida property for $1 million to Carmen. Under FIRPTA, Carmen would be required to withhold $150,000 at the closing and send it to the IRS. That's what FIRPTA says. Due to the unpredictability of the issuance of funds by the IRS, and the $150,000 withheld may not be available to Juan when he's scheduled to complete the purchase of his replacement property, right? Because if Juan plans to sell this property in order to buy another property, the IRS is not going to give him the money back on time for him to buy the other property, right? And under 1031 exchange, all of the money needs to go to the other property. So what we can do in Juan's case is he can file the application for the withholding certificate, right? So the withholding certificate for disposition for foreign persons of U.S. real property interest. And that way he can do the 1031 exchange, okay? Because that may serve as a notice to the IRS that he's planning on completing the 1031 exchange. This means that the 8288B can potentially relieve the foreign taxpayer from FIRPTA withholding. In order to qualify for this withholding relief, the 8288B and a contract for the purchase of the replacement property must be submitted on or before the replacement property's closing. So we have to do this before he buys the other property. The IRS should determine whether or not to accept the 8288B within 90 days of receiving all the necessary information. Therefore, the 8288B needs to be submitted as soon as possible in order to get the determination before the close of the relinquished property. Nobody's going to wait 3 months to sell their real estate, and no buyer is going to want to wait 3 months until the IRS says, yes, you don't have to withhold, or no, you do have to withhold. In order to avoid this, to avoid the withholding and to be able to close on time, what we do with 1031 exchanges is the buyer can deposit the additional funds with the closing agent before the sale of the property, okay? So in addition to filing this 8288B, foreign taxpayers will deposit the amount equal to the required withholding in this case will be $150,000. So for example, if Juan's 8288B is not granted or not granted in time, he'll be unable to reinvest the whole $1 million in order to take advantage of not paying capital gains at that moment. So what he can do is deposit the extra $150,000, right? So that way, by the time he gets the withholding certificate, he already has purchased the property and that's his money, he can get it back. So Juan deposits the additional $150,000 with the closing agent. This will be used for the FIRPTA withholding, leaving the entire $1 million net proceeds to be sent to the qualified intermediary. Once the IRS responds to the closing agent, the $150,000 goes back to Juan. So in this case, even though FIRPTA should have applied because it was named in the person's name, because we did a 1031 exchange, we used it to acquire another property, the whole $1 million. No FIRPTA withholding, FIRPTA withholding kind of took place, but nothing needs to be sent to the IRS, and the whole amount is used for the purchase of the other property. If this seems a little complicated, it's okay, it is. But if the people know how to do it, if you're dealing with a title company or a law firm that knows how to do it, it can really help the client not have to send 15% to the IRS, not knowing where they're going to get it back of the sales price. Let's think about this. FIRPTA withholding, it's not of what they're going to gain, is of the whole sales price, okay? All right, let's see if we have any other questions. I don't see any more questions. Anybody? Let me see, I can stop. That's my contact information for all of you guys. I will put it again here in the chat, but you can find me on all your social media. That's our website, that's our phone, and that's my email. Let me see, 1 second. So I don't know if anybody else has questions. Please put them in the chat. I think I see one question, okay. Does the seller need an ITIN if the sale is under $300,000 and is used as primary since there is no FIRPTA? No, they don't, because FIRPTA will not apply. So the seller does not need an ITIN because we're not sending anything to the IRS. The buyer is going to sign the affidavit, so they shouldn't need one. So what law services do you offer? Okay, so I can tell you, I do real estate law. We do probate law all over the state of Florida. We do state planning for all of your people in the state of Florida, for foreigners too who have Florida assets. We do litigation all over the state of Florida. Trademarks, it's federal law, so we do trademarks all over the United States. We do federal trademarks. We do immigration, both family, investment, and employment. And I think that's about it of what we do. And if there's something that we don't do, we always work with other attorneys and we can refer you to one that can help you with whatever situation you're facing. So litigation, copyrights, trademarks, immigration, litigation, if I already mentioned that, estate planning, probate, and closings all over the state of Florida is something we are able to help you with. I will be sending everybody the slides, and this is recorded, and I hope it comes out good so I can send everybody the recording. If you have any questions, you can feel free to contact me by email, by phone, so that we can help you. Somebody's asking me if a foreign person dies, is the transfer to his heir subject to FIRPTA? The transfer, it's going to be subject to state tax of 40%. So when foreigners die and they have real estate in their name, they only have a $16,000 exemption. So what does that mean? Let's say that the market value of the property is $500,000, okay? So they have a $60,000 exception or something like that. So $500,000 minus $60,000, we have $440,000. That's gonna be subject to a 40% state tax. So 440,000 times 40, $176,000 state tax. I know it's crazy. So please reach out to us. We do handle probate for foreigners. We work with CPAs to file the appropriate tax return and to see if there's any way that we can alleviate that state tax, or hopefully it doesn't apply. There's some treaty or something, because it's not the FIRPTA that will apply, it's that the state tax, which is 40%, that will apply when a foreigner owns real estate in their own name and they pass. Somebody's asking, what's the most common mistake you see buyers and sellers make with regards to FIRPTA? Hire the wrong title company and attorney who don't know how to deal with FIRPTA and then have the buyer be liable. That's the worst thing that you can do. You need to be involved. If there's a foreigner that you know as a seller is a foreigner, or a company or whatever it is, be involved. The buyer needs to be responsible, hire a good attorney, because at the end of the day, they're gonna be responsible to the IRS. If things get complicated, if the seller's undocumented here, okay. So if sellers are undocumented, right, they're still a foreigner and they don't have a social, but they can apply for ITIN and they can send the money to the IRS. They're probably not gonna see it back, but they can send the money to the IRS through an ITIN. So the IRS wants everybody to file taxes, undocumented, not documented. So they will give you an ITIN for you to file taxes, absolutely, and they'll take your money for it. All right. Else. I'll email you an address in the deed. Can you look it up for me? I have several attorneys tell me that the home fell into FIRPTA state tax, but that they listed it with an agent and told them they did not have to pay. Okay, yeah, send me an email, send me the information, let us look at it. Does FIRPTA apply if they sell to another foreigner? Yes, it does. Send me an email with any specific question. If it's something I can help you with, I will, gladly do it. We do offer free probate consultations. So if any issue has to do with probate, you can have a free probate consultation with either me or Diana, who's a probate attorney at my firm, and she can explain all of it. So if you guys are going out getting probate listings, we do offer free probate consultations for you, for the clients, whoever it is. We could also work it out so that we get paid some of it at closing, so that it's better for the heirs to deal with probate. They don't have to come up with money up front. We can work something out for them. All right, well, thank you so much to everybody that attended. I'm gonna put my contact information here again. I hope that you do see me as a resource. And if there's anything I can do, if you have buyers that are hesitant to sign a FIRPTA addendum to a contract, you need me to explain something to them. We represent buyers, we represent sellers. We can represent the transaction in any type of closing. So we could explain all of this. We can explain in English, in Spanish, French soon, because I do have somebody that's coming in that speaks French. So we can do all of that in order to help you guys secure the transaction. I know how hard it is to get a deal done, and we want to ensure that it's a smooth closing. So we will work with you to resolve any title issues, any HOA issues, any violation issues, whatever issues you have with the property, it's probably something we can solve, okay? Or if not, we will let you know so you can find a solution. All right, well, thank you so much again. Thank you for joining me. My name is Romy Jurado, and it's a real pleasure to speak to you guys this afternoon. I hope we can work together soon. Bye-bye.